What are the two things that can wreck your cryptocurrency investing and make the whole process feel like a roller coaster of emotions that will lead you down the path of destruction? The two things are FUD and FOMO. These are the two things that you need to be aware of when you are investing and thinking about your journey of investing in cryptocurrencies. Let's start with FUD, okay? Fear, uncertainty, and doubt. So this is a real thing, and I didn't quite understand this in the beginning, and through the process of going through some bull and bear cycles, I recognized the power of FUD and how people make rash decisions in how they invest. So fear, uncertainty, and doubt. What FUD normally associates itself with is a declining bear market. So if you're not familiar with what bull and bear market is, quickly what they are is a bull market is when a price of an asset that you're investing in is going way up. And a bear market is when it's going down. When we look at the S&P 500 and the NASDAQ, like the overall stock market, overall goes through a bear and bull market cycle in its own. Like, so the S&P 500 has 500 of the world's best companies, and overall they go through bear and bull cycles. Although some of those independent companies can have their own little mini bull and bear cycles on their own. So when we're looking at cryptocurrencies, Bitcoin is like that behemoth. And I just say that word because it's the one that brings all of the other altcoins with it into a bear and bull cycle, as far as we know right now. Eventually, altcoins will take their own path and decouple themselves from Bitcoin in the future. I do believe that, but right now, it tends to be that when Bitcoin moves, the altcoins follow. There's a little bit of a lag actually also. So like Bitcoin makes its move, and then altcoins sort of lag in the direction of where Bitcoin's going. So Bitcoin tends to be this market maker. And you can be invested in Bitcoin and some altcoins or whatever your portfolio is, and Bitcoin goes through a bull market, and you might not even be aware of bull and bear markets. And as Bitcoin is going into a bear market, it's just when you naturally begin to invest. In fact, that was the case for me. So I had just missed out on the 2017 bull market rise. Like if I would have been investing in 2016 or even late 2017, I would have taken a lot of advantage of that bull market. But it just so happened that that had just ended, and I was investing right at the top of that bull market. And I didn't really understand the ebbs and flows of how markets rise and fall. I wasn't an investor, so I didn't really know any of this. And as soon as I start to get into investing, I experienced a long, lengthy bear market, 3-year bear market that began right then and there. And what I experienced was the most tremendous amount of FUD you could ever imagine. So like, it goes from saying, oh my God, this is the best investment in the world, and as it's going up in its bull market towards $20,000, which it crested, to oh my God, this is the worst investment you're ever going to be in. It's going to go to zero, and you'd be crazy to put money into Bitcoin. So I obviously went another direction from listening to that FUD, right? It's called the contrarian route. Actually, you're going the opposite direction of what the FUD is, because now, I was mentored by people who were wise to this, and they were extremely successful investors and traders in the traditional markets and on Wall Street that had made the transition over to investing in cryptocurrency. So I was trained in a way to absorb and understand FUD as it was right in front of us, because I was like, oh my God, what do I do with all this FUD? And I'm telling you, if you invest in this, space long enough, you will experience the power and the discomfort of FUD because you're investing your money, or you're putting your money into this. Now, when I put $100 into Bitcoin at the top of that bull market, or the top of that bull market, when Bitcoin went down to its lowest several years later, towards like 6,000, then down even to like 3,500 was its lowest, that $100 was worth 20 some dollars. So that's a lot of decline. And like, scale that to $1,000, $10,000, right? If you go from $10,000 like $2,000, that's scary. Okay, it's scary to invest your hard-earned money and then go through a process of the decline. Okay, but I had confidence. I had awareness of overall structures. I started to learn the Bitcoin halving. I started to learn that there was ebbs and flows to this market, and that perhaps one day I can make the speculation that Bitcoin will return to its previous all-time high of $20,000, which it then did. Right? It did, and then it went to over $60,000 a Bitcoin. So keeping that $100 in there for the long haul brought it up to like $300, $400 instead of that $100. Now, it took 4 years to get there, but it got there, right? And our whole ethos here at Cryptofluency is like being in this for the time that it takes, like not putting $100 into something that you're hoping goes to the moon. Now, at that time that I invested, there were people throwing tremendous amounts in, thinking that Bitcoin was going to go to $100,000 of Bitcoin. In one of my previous videos, I talked about a person who actually ended up losing over $4 million in valuation because of that, and sold and actually took and realized those losses because he thought it was going to go to $100,000. Why did he think it was going to go to $100,000? Well, let's look at the phenomenon of FOMO, okay? FOMO is fear of missing out. Fear of missing out tends to happen during the incline of a bull market. So that's exactly what this guy was pressured with, FOMO, meaning this project, Bitcoin, rose up from where it was over the course of the last accumulation phase up to $20,000 a coin. It blew the minds of modern investors, right? And now the news was all about, oh my God, Bitcoin's going to go to 50,000. It's going to go to 100,000. And that type of news is FOMO. So what people do, what they're pressured to do is to put as much money as they can into it, because man, if it's at $20,000 now and it goes to 50,000, well, I doubled my money. So if I put $1 million into this, I'm going to make $2 million. Wow, right? FOMO will destroy your crypto investing as well as FUD. What FUD does is it makes you miss out on the opportunity to invest. So this bizarre thing happens where people are willing to FOMO in, right, at the top of these market cycles. And then what happens is they get shaken out during a bear market and sell kind of like towards the bottom because they want to stop the pain of seeing their asset decline. But that's exactly when they should do the opposite. So normally what you want to do is you want to be buying in at the lower aspect, what they call the trough, the low cycle, the accumulation phase that tends to happen after a capitulation. So a cycle normally kind of goes down like this for a while and then drops like a kind of a cliff. And that's like a despair phase where really then FUD starts to come out. FUD of all kinds. This is the worst thing ever. Nobody's investing in this. And then you hear, invest in gold, invest in uranium, invest in all these other things. Get your money out now, or you're going to lose it all. That's FUD. and it's going to destroy your account, right? Like if that dude who lost $4 million because he put $5 million into this thing, I think that's what he did. He put $5 million in, and he lost. When it went down to $1 million, he said, "I have to get out of this." So he lost $4 million. But if he would have kept that in for that 3.5 year period, it didn't FUD out. He didn't capitulate and shake and sell out at the bottom, because he was doing some research and understanding that this project was here to stay, perhaps, and that if he would have just buckled down to stay in the game, that would have been 15 million or more, almost $20 million at that $65,000 that happened there. Now, there's all factors, right? Who knows, right? He oversold himself. He put too much in, so I get it. It's like difficult. You might have had all kinds of other responsibilities to do with that money. That's why you don't put that much in, especially during the FOMO phase. I'm not wanting to buy any cryptocurrencies that I'm stacking into my portfolio in an uprise phase. I want to already be positioned and accumulate during the accumulation phase. But for some reason, human beings have this backwards, and we do it at the wrong times. We actually buy in at the top and we sell at the bottom, when all we really need to be doing is buying at the bottom and selling at the top. It sounds super easy. And to be honest, I don't understand why it's so hard, other than the fact that people are motivated by greed mostly and influenced by other people too much. So if you're not motivated by greed and you can think for yourself, you will find this to be an easy way to do things. And this is a person who got in at the very top of a bull market. So I experienced nothing but decline, and I was cost averaging in. So it would be at $16,000. I'd buy $100 in. I think that was around when I started to put money in. $9,000, $6,000, right? You start to accumulate because you understand. You're doing research. You're understanding more of what you're investing in. You understand that there's halving cycles with Bitcoin. Halving cycles is a whole nother phenomenon that once you understand it, it gives you a little bit of clarity with all the FUD that's going on, right? So be careful of these two aspects of what you're going to hear, what your parents are going to tell you, what your friends are going to tell you, what the news is going to tell you. I started to actually research and read and listen to audiobooks from past traditional investors. Peter Lynch was one of them, the greatest, that I love listening to. And he's got plenty of books, and he talks a lot about this, okay? And when you can wrap your mind around educating yourself outside of the box, then what happens is you have more confidence to hold and to be there for the longer haul. Okay, yes, it's a rainy day. Yes, things are going down. Yes, there's a lot of FUD, but I'm not going to listen to it. And one of the greatest things I heard Peter Lynch say was that sometimes it's good to listen to people, and there are times when it's better to listen to no one. Because you've done your homework, you've done your research, and now it's time for you to actually not listen to anybody, because it's just going to mess you up. And at the time, I'm listening to so many people. I'm listening to this book and that podcast and these people and that people. And I was like, I don't know if I'll ever fit into that category, because I always I was in the zone of doing a lot of research and doing a lot of understanding. And then I found myself being just like that, just listening to yourself and not everyone else. See, we have a tough time listening to ourselves most of the time because of the stimulation that's coming from everywhere. So beware of FUD and FOMO in these cycles that occur throughout the volatility of this space. Okay, because there are bull cycles and there are bear cycles. And within them are massive volatile moves, like uprises of 60%, downturns of 30% within perhaps a 5-week cycle. And there's a lot of FUD and FOMO on every nook and cranny of that. And if you're out there listening to that, you're going to be whipsawed out of your positions. You're not going to feel confident in how you're investing. You're going to sell short and you're going to sell out of your position, or you're going to buy in at the wrong time. Okay, so you want to be smart, right? You want to be with the smart money. You don't want to be what they call the dumb money. It's actually what they say, smart money and dumb money. Dumb money buys at the top. And what do? Where are they buying it from? They're buying it from the investors who invested at the bottom. Okay, and when we come all the way down into the bear cycle, who are they selling it to? They're selling it to the people who are accumulating and getting ready for their position to go up. Now, this is a lot to understand, and I get it, and I understand that it's difficult to wrap your mind around how to stay focused and clear through this process. So at Cryptofluency, that's what we focus on. We want you to be clear, cool, calm, and collected through the process. Because there's a lot out there. And I'm not going to tell you anything that you can't find on your own. Except for that, I've done this work. I've done this research. And I've seen the temptation of being whipsawed in and out of these projects. And I've seen some of the people who were mentoring me fell way out, to my complete surprise. Okay, so don't think you'll be able to manage it and stomach it and strengthen yourself through it, because it is challenging. But when you're in the right place at the right time and you've positioned yourself correctly, there's nothing better than to ride a nice wave up. Okay, but what do we do when we ride our wave up? See, it's difficult then to actually get out of the position at the right time. These are all aspects we go through in the trading course here, in the investing course. Well, we make that a little bit simpler to understand. Okay, so that you don't have to go on this journey alone. Okay, we could do it together, and that's where I hope to see us. So I hope to see us at the top of our successful investing journey. And what I don't want to see is people whipsawed out in the FUD, blood on the streets avenue, or FOMOing in at the top without the understanding that they might need to hold for a while. Warren Buffett says, his famous quote, money is made when there's blood on the streets. And blood on the streets, I mean, when you look at charts, there are green candles for times when the price is going up, and red candles when the price is going down. And in a bull market, you'll see a tremendous amount of green candles constantly going up and up and up and up and up. You might have 7 green candles and 1 little red candle, and then 18 green candles and a little 2 red candles. Okay, and in a bear market, you're going to see the exact opposite. You're going to see red candles, 20 red candles, and a little green candle, and 2 green candles, and then a tremendous amount of red candles and a little bit of green candles. And then when you get all the way down to the bottom there, it just looks like red all over the place. But that's when one of the wisest investors, speculators, and odds makers. I mean, Warren Buffett was so good at calculating odds. He understood that that's when you make the most money. Okay? So that's not when to sell, it's when to buy. And if you follow this mentality of Warren Buffett and what we're trying to express here at Cryptofluency, you will see your portfolio lengthen itself through the years, grow itself through the years. Okay, so we hope to see you at the top and at a video soon.